Hello everyone, welcome to another episode of Bullsmart Investment Academy. In our previous videos, we have learned the basics of mutual funds and also discussed the types of equity and debt mutual funds. In this episode, we will learn about all the remaining types of mutual funds. Till now, we know that equity mutual funds are like roller coasters that take you higher in the long term, and debt mutual funds are magical piggy banks that will increase your wealth and keep the money safe. Now, there is a third category that is a mix of roller coaster and piggy bank. It's called hybrid mutual funds. So, if you cannot choose between a roller coaster and a piggy bank, you can enjoy the best of both worlds. These funds invest in a mix of stocks and fixed income instruments. However, the blend can be different to suit the requirements of different types of investors. So let us understand what are the different types of hybrid mutual funds. The conservative hybrid funds have a majority of the corpus in debt instruments and the rest in equities. Balanced hybrid funds have almost equal allocation in equity and debt. In aggressive hybrid funds, equity allocation is in majority while debt is in minority. So investors who wish to have more equity or the thrill of equities can go for aggressive hybrid. Conservative investors will find conservative hybrid funds ideal for them, and balanced proportion for a balanced mindset. It's all in the name. There is another exciting category of hybrid mutual funds in which the fund manager has the freedom to spread his wings and can go for equity as well as debt in whichever proportion he finds suitable according to the market condition. This is called dynamic asset allocation or balanced advantage fund. Now, apart from equity and debt, mutual funds can also invest in other asset classes. The multi-asset allocation fund is bound to invest at least 10% in 3 different asset classes. The third asset can be gold, real estate, commodities, etc. In an arbitrage fund, the manager uses an arbitrage strategy with a majority allocation in equity. Equity savings is the new category that also invests in derivative. If you want to invest for a specific objective like retirement planning or your child's future, mutual funds offer goal-oriented schemes that solely aim for their objectives. So that was hybrid funds, where you get to enjoy the benefit of growth with stability through a mixed portfolio. The choice of a hybrid funds depends on the investor's risk tolerance, financial goals, and investment horizon. These funds offer a versatile approach to wealth creation by blending the dynamic nature of equities with the stability of debt instruments. Till now, we have learned about all the types of mutual funds that are actively managed, but there are also funds that are passively managed. Now, you might wonder, what are these passively managed funds? Let me explain. You remember the pizza story from episode 1, right? Where the chef was making the pizza for the kids, and we understood how a fund manager handles a portfolio of multiple investors. Now imagine there is a machine that bakes pizza on its own. Here, the chef doesn't have to put any effort. However, the machine-made pizzas may not be as good as the ones prepared by the chef. In passive mutual funds, the fund manager does not actively manage the portfolio of the fund. The portfolio of such funds is made up of indices or commodities. Index funds and exchange-traded funds, ETFs, are like machine-made pizzas where the fund manager won't be actively making changes to the portfolio. Some examples are Nifty 50 Index Fund, Nifty 50 ETF, Gold ETF, etc. The only difference between index fund and ETFs is that ETFs are traded on stock exchanges while index funds are handled by AMCs. So that will be all for the types of mutual funds. We tried to cover all the types of mutual funds that are currently available in the market in the shortest way possible. If you have any other doubts regarding mutual funds, please raise them on the comment section below. See you on the next episode of Bullsmart Investment Academy. Till then, happy investing. Mutual funds are subject to market risk. Please read all scheme-related documents carefully before investing.